Good morning, distinguished delegates, ladies and gentlemen. I must thank Hong Kong TDC for inviting me here to share with you a few thoughts. The theme of my presentation this morning is opportunities for Hong Kong professions in the next 5 years. And as an accountant, I choose to use the accounting profession as an example. This is the agenda for the presentation, a macro view, because I think this is very important for us to grasp the context and the big picture, and then an historical recap of the economic development on China, the challenges facing her in the next 5 years, the key messages in the 12th five-year plan, Hong Kong's unique role in China's economic development, and the success of the accounting profession here in Hong Kong in the past, and looking into the future. Well, why macro view is important? Number one, professional service is a derived demand. Same for accounting services. If the underlying economic activities is good, then the demand for our services would be very good. And secondly, it is the impact of the Chinese economy on our economy. As you know, Hong Kong is extremely external reliant. In the past, it has been said that if the U.S. sneezed, Hong Kong would catch a cold. But nowadays, if China has any hiccups, we will be in deep trouble. So for us in Hong Kong to be certain of our economic development in the future, apart from watching closely what is happening in the U.S. and Europe, we have also to pay very close attention to the developments on the motherland. And I choose to give you this quick overview, also because of your ambassadors for Hong Kong. And I think it would be helpful to you to have a better understanding of the economic dynamics here. Well, historical recap number one is on the GDP growth. From 79 to 1999, over a period of 20 years, the average GDP growth is 9.9% per annum. And from 2001 to 2010, the last decade, it was 10.7%. This is the only country in history has such a prolonged period of such a fast economic growth. Nowhere in the world up till now. And if you look at the recent figures, I mean, if you look at the last 5 years, which is the period of the 11th five-year plan, the average GDP growth was 11.7%, even higher. That tells you the momentum of the economic growth. And in the past 30 years, there were 3 major leaps bringing about this economic development. The first, of course, when Deng Xiaoping announced China open up to the outside world after closing their doors for 30 years. The first is the rural reform. The implication is to increase the income of farmers, release the productivity of the farmers, and more importantly, release a tremendous number of cheap labor to the cities, which become a very important factor of production. And the second major leap was in 1990 to 1992. As you all recall, in 1989, the tragedy in Tiananmen Square happened, and all foreign countries stopped their investment into China. The only major investor at that time is people from Hong Kong. And there were very serious political struggles inside of China. And at that time, Deng Xiaoping visited Guangdong and Shenzhen, and then reaffirmed the opening up policy. And that pushed the opening up progress and pushed the economic development in China. And from 2001 to 2007, the GDP growth was from 8.3% to 14.2%. So actually, in the past 2-3 years, because the external economic situation, because of the fear of an overheated economy, China is in fact trying to keep the growth under control and reduce the growth rate. Well, if we take a look of the size of the economy in a relative sense so that we understand better the economic strength of China. In 2005, we overtook UK. In 2007, we overtook Germany. And last year, we overtook Japan. And now become the second largest economy in the world. We expect to catch up with the US in 2025. That means about 14 years later. If this target is achieved, then US and China will each contribute about 15% of the world GDP. And the target GDP, the GDP for 2010 is 4,300. I give you this figure because then you know actually although the economy, the size of the economy is huge, on a per capita basis is still relatively very humble. By World Bank standard, this is the lower middle income country. The target GDP, not in 2010, I'm sorry, there is a typing mistake here. It is 2020. The target is US 11,900. It is slightly more than a double. So in that sense, purely from numbers, seems to be an achievable kind of target. Well, what were the success factors of China in the past 30 years of opening up? It was firstly because of low labor costs, abundant supply of cheap labor. The second is the low land costs. And the third one is without a proper regard to the environment, so the environmental costs. Then you can understand in the past 30 years, the growth was in fact generated by low value-added manufacturing and very dependent on exports. The fifth pillar for the past economic growth is number one, foreign investment, number two, export, and number three, infrastructure investment. But this could not carry on without limit. So the trouble or the challenges facing mainland at the moment from an external standpoint, as you all know, the slow recovery in the US, the Eurozone debt problem, we all fear about a possible double dip. And then the third one is what we call the middle income country trap. That means as a country, when you grow from a very low starting point, like China, as I outlined earlier, whether you are able to leap forward, this is a very difficult hurdle. Because in the past, you can rely on cheap labor costs, cheap land costs, environmental issues being ignored. But going forward, you cannot rely on that. If you cannot rely on that, what will be your growth engines? But on the other hand, you cannot totally at once relinquish all this because this is with you. So around the world, if you look at economic history, some countries were able to break through, countries like Japan, Korea, Singapore, and Hong Kong. But there were countries who was, relatively speaking, struggling. Very difficult to get through this hurdle. Countries like Malaysia and America. So facing all this external challenge, then you can understand internally to tackle this, China has to increase domestic demand, consumer demand, as mentioned by Chairman Jack. This is to minimize the dependence on external demand, minimize the dependence on export, and then enhance the manufacturing industry in areas of technology and knowledge. That is to minimize the dependence on traditional industry, which is light manufacturing, electrical appliances, trying to move up the value chain. And the third challenge is to gain new advantage, hoping on innovation, technology, and renewable energy. This is to minimize the dependence on the traditional three advantages that I mentioned. And fourthly, to reduce carbon emission. Energy cost is expensive, and also politically, not bringing this down would be intolerable in the international arena. And the fifth challenge is urbanization. Urbanization rate for China at the moment is about 47%. If you compare this to the US, which is around 80%, and other developed countries, then you will see there is still a very big gap. So in the 12 five-year plan, they put a target of adding 5 percentage points. And this urbanization itself, the implication is continuing investment in infrastructure. And also in terms of business opportunities, instead of focusing yourself on all the primary cities, consider the secondary cities and the third kind of cities. Those may offer more opportunities. Political reform, it goes without saying, and the control of the impact on the impact of inflation on people's livelihood. Well, that brings me, with that historical recap, I hope would give you a good context of what is happening in the past 30 years. And looking forward in the next 5 years, in the 12 five-year plan, there are a few key messages. Number one is stable but relatively fast economic growth. Measured by GDP, the target is the target is high single digit, anywhere between 7.5 to 9.5%. The reason being, too fast a growth would bring about the overheat situation and inflation. But too low a GDP growth would not be able to absorb the new graduates every year. If unemployment goes up, troubles politically and economically. In order to do that, they need to boost domestic consumption, drive innovation, and modernize their services sector, because service sector as a percentage of Chinese GDP at the moment is around 46-47%. If you compare this to the US and the UK, they are over 75%, over 80%. Compared to Hong Kong, city economy, we are over 90%. So there is tremendous room for growth. So from an investment standpoint, this is the area that you and your business friends would be interested in. And the fourth is to promote regional cooperation, particularly for Hong Kong is Pearl River Delta region. If you want to go to Shanghai, maybe there is reason for you to go direct. If you want to go to northeastern of China, there may be business reason for you to go direct. But Pearl River Delta have about 100 million people. In terms of our country, this is the highest GDP per capita GDP area. It is not just export, it is very big consumer market. Focusing on this market alone would give you the size as big as Europe. So for Hong Kong, the Pearl River Delta is important. And the third message, of course, is continue to open up. And the fourth one is to reduce carbon emission. Hong Kong's unique role in this particular context is to help China to raise its competitiveness. This is the center for technology and knowledge transfer. This is a platform for them to experiment their policy. For example, the next move for Chinese economic development is to reform their financial system, to bring the renminbi to be an international currency. To do that, use Hong Kong as the platform to experiment. And of course, the management and governance expertise. The second unique role we play is international financial center. Of course, in terms of number of listed companies, in terms of market capitalization, we are smaller than Shanghai. But in terms of the credibility of the market, in terms of the openness of the market, in terms of the ability to raise funds, nowhere near Hong Kong, Shanghai. At the moment, Chinese companies, they are short in cash. But the CSRC, the Chinese Securities Regulation Exchange, do not allow them to raise funds from the market. So mainland companies need, at this time, still need Hong Kong to raise funds. So this is, for us, a very important competitive advantage and contribution to our country. And thirdly, internationalization of renminbi, as I said earlier. And fourthly, we help China to upgrade its professional services and other service sector. As you may realize, when people go to China to do acquisitions, they always engage Hong Kong accounting firms to do the financial due diligence. Why? There are plenty of accounting firms on the mainland. I think it is not just our accounting standards are international level, but it is because of our integrity and professional ethics that command the trust and respect of investors. So even if they may need to pay a premium, they still use Hong Kong professionals. And Hong Kong is the gateway for China to go to the rest of the world. The next 5 years, or actually the next 10, 20 years, I think the major flow of doing business with China is Chinese investment going overseas. And in that respect, Hong Kong plays a significant role. And of course, the fourth point is the supply chain management. We got the expertise and the information availability. A leading city in PRD I mentioned earlier, so I won't repeat. And taking the accounting profession as an example, we have benefited a lot from Chinese opening up. The profession as a whole generally, and our firm in particular, along with other accounting firms. Setting up business on the mainland, if you have the experience, you know how painful it is. In Hong Kong, it is a matter of hours. You set up a company. On the mainland, it is a matter of months, and it's also very costly. Also, tax planning opportunities, tax compliance. In terms of tax penalty, if you are having tax problem and got a tax mitigation on the mainland, they calculate their penalty on a daily basis. Then you know how scary that is. And thirdly, to take advantage of Hong Kong's favorable double tax agreement with the mainland. This agreement was signed just a couple of years ago. So in the past few years, I saw many foreign investors originally using an offshore company as their intermediate holding company to hold their investment into China. They all changed to use Hong Kong companies because of the favorable double tax agreements in terms of withholding tax, in terms of capital gains tax on the disposal of your investment, in terms of transfer stamp duty, we all get very preferential rate. Actually, the best rate when compared with any double tax agreements with mainland. We also advise on clients in terms of their custom, foreign exchange, and other legislative compliance. Also help them identify their business partners, joint venture partners, and acquisition targets. And in the process, also help with the financial due diligence. And also help the PLC companies to identify investors and secure financing. And second major role we have played, as you all know, is outbound IPOs from mainland of China. No matter it comes to Hong Kong or goes to New York or London, we have a role to play. Hong Kong accounting firms service many mainland companies listed on the overseas stock exchange. Let me give you a few figures. The first mainland company coming to Hong Kong for listing was Qingdao Beer. Enjoy a couple of them tonight. They came in 1993, just raised a couple $100 million. It was because at that time, after the June 4 event, China was sort of foreign exchange. But till now, the number of mainland companies listed on the Hong Kong Stock Exchange are over 500. In terms of market capitalization, they account for about 60% of our market. In terms of daily turnover, they account for over 70% of our market. So you know how significant it is. And in the next wave of economic development, I would see more and more mainland Chinese private enterprises coming to list, because in the past, it is mainly state-owned enterprises. And going forward, I'm very optimistic. We will continue to be an advisor and risk manager to foreign investors interested in doing business or investing into China. We will continue to be China's best open capital market, and we will play an increasingly important role as an advisor and risk manager to mainland companies venturing into the international arena. And in the past 12 months, we have seen changes in the attitude of mainland officials in terms of compliance. They have tightened up a lot in terms of tax compliance, individual income tax compliance, corporate transfer pricing kind of investigation are many, and that provides opportunities to us as accountants. And that also means doing business in China is, you will have very tremendous potential, but at the same time you need to plan your activities carefully and pay more attention to the various regulatory compliance aspects. Otherwise, that could be very torturing. Yeah. Going forward, Hong Kong to become our renminbi offshore center in terms of IPOs, we will see more IPOs denominated in renminbi. And in order to promote an active market for renminbi outside of China, to gain the international recognition and increasing use of renminbi so that it will become a truly meaningful currency as an alternative to Euro, to US, I think there would be a lot more investment products denominated in renminbi coming up. And that would also provide tremendous opportunities for professional services providers. And my final point is about the asset management center. For reasons we all know, many rich people on the mainland want to have some of their assets parked overseas, and Hong Kong is the natural choice because of the close proximity, the culture, the understanding of the regulation, and the rule of law. So with that, I conclude my presentation this morning. Thank you very much indeed. Thank you.